Everyone likes retirement. Well, not everyone, but everyone enjoys the concept of not having to work and getting paid, relaxing. That's what it's all about. But what people don't appreciate are surprises in retirement. And one surprise that I've noticed quite a few people have been dealing with lately is the IRMAA surprise, the income related monthly adjustment amount. This is a surcharge to their Medicare premium that applies to Part D and Part B. Now you might be thinking, what is this? Why do I care? I'm not on Medicare yet. Well, you don't want to be surprised when you do go on Medicare and you have to pay more than everyone else because of something you did 2 years ago. And I'm going to talk about that today. The IRMAA surprise, how to avoid it and how to appeal it if you get nailed with it. Let me bring my co-host, Tony Shore, to the stage. Tony, welcome. We're talking IRMAA.
Did they name this after my aunt? My great aunt Irma?
We did a show years ago about this, and I was referencing Hurricane Irma that came in and destroyed the Tampa Bay area.
Yeah.
And it was too soon, I think. But I think we can...
soon, yeah.
I think we're okay now because we've had a couple of hurricanes since. So IRMAA, yes. Income-related monthly adjustment amount. And so those of you that are watching are probably like, okay, yeah, I got this letter and I don't like it. What is going on? How do I appeal this? So I want to go through that. But those that are still wondering, what are we talking about? I'll real quick, when you go on Medicare, typically at 65, you have to pay a premium. It's not free. Medicare is not free. People think it is. It's not. And so you pay money to get on Part B. And that comes out of your Social Security check, or you pay a check.
What is that now, like 160 or
170? Yeah. 170. And that's the baseline for everyone, but it could be higher if you get an IRMAA letter. So what happens is they look at your modified adjusted gross income, magi, whatever you want to call it, magi, and they look at that from 2 years ago and say, did you make above this threshold? And if you did, we're going to charge you more for Part B. We're going to charge you more for Part D, which is your drug plan.
Because you made more than a certain amount. Because
you made above it. And so people are surprised when they get this. Trust me when I say some of the, oh my God, Dan, what's going on? And I often say, remember, I talked about this. You're going to get it and we're going to appeal it. So but still, when you get that letter from the government that says you owe us more, a penalty, I call it a penalty. They call it a surcharge on their Part B premium. It's nerve-wracking to say the least. So I want to talk about a little bit more detail about whether or not you would get it, and then how you can appeal it if you do get it. Okay.
Right.
So the key though is it's based on your modified adjusted gross income from 2 years ago. So if you're watching this and it's 2024 and you got a letter saying, hey, you owe more because you just turned 65 when on Medicare. And you're like, well, what are you talking about? I haven't worked all year. Well, I didn't make a lot of money. They're looking at 2022 taxes 2 years ago.
I gotta know what my adjusted gross income was 2 years ago.
Yeah.
I don't even remember what I had for lunch yesterday. Well, actually, I do. It was pizza, probably. That's always a safe answer, pizza.
Right.
But yeah, I mean, let's see, radio show co-host salary. Let's see here.
Right. I don't think you're gonna fall. I'll show you what the IRMAA limits are.
Yeah, I'm not gonna.
I don't think you're there.
I'm not getting the letter at this point. Yeah.
So, but you might, and that's the thing. There are people that they don't make a lot of money, and then they get this IRMAA letter, and they're like, "Why?" And it's because of some things that they didn't realize. There's a couple of unexpected reasons. I'll get to that in a minute. But let's talk about modified adjusted gross income. That is your adjusted gross income. So if you're looking at your taxes, which people are like, oh God, here we go, taxes.
Dan's talking about taxes again.
Show me on the 1040 where it made you uncomfortable. So you look at line 11 on the 1040, and that's your adjusted gross income. So basically, that's all the income you get, right? Before you take any deductions, before you take your standard deduction, which most people take. So this is before that. So it's a higher number than you might be thinking. And then you add the tax exempt interest, which is line 2A of 1040. This is, some people have it. Well, not many people do. This is municipal bond interest. Oh, I don't pay tax. Yeah. They add it back. Foreign income so that gets added back. But bottom line is you look at your modified adjusted gross income, not net, not after not after
The
you take the
Magi.
deduction. Yeah, Magi, right. There were 3 of those that went and saw, frankincense, myrrh, and incense. All right. So this number is what they use to determine whether or not you have to pay more for Medicare Part B and Part D. So right in 2024, the limit is $103,000 for a single person. It's double that if you're married, $206,000. So if you fall under that, then you're not worried about it. You don't get an IRMAA letter. And people, you might, like Tony, you might say, oh, 103. But again, this is from 2 years ago. So 2024 is determined by your tax. And why? Why? People ask me that. Why are they looking at 2 years ago? Well, if you think about it, they come up with the IRMAA determinations in January, right?
Mm-hmm.
And they can't use the last year's tax returns because they're not filed yet until April. So they have to go with the last tax return they have, which happens to be 2 years ago.
True.
Right?
Good point.
A lot can happen in 2 years. You could retire. You could move.
Yeah.
Right. So again, the tax brackets are 2 years ago. Now you might be saying, I'm going to go on Medicare in 65 in 2 years. I'm 63. What is the tax bracket going to be in 2 years? We don't know. You have to use this year's income 2 years in advance to figure out, well, what do I have to keep my income this year? So it's like, I can't do that. How am I supposed to?
Doesn't seem right. Yeah.
Right. But it is what it is. Right. Here's a important point I want to get out before people start talking about, before I indicate how people get caught by surprise. This is a big one. IRMAA the brackets for IRMAA are a tax cliff. So once you go $1 over that, say the first cliff is 103,000. If you make 103,001, you're in. You get the full surcharge, for that bracket by $1. It's like
even you only made $1 more.
It's like the Price is Right game.
Mm-hmm.
Right? You go 1 penny over, that yodeler's going over the cliff.
Go off the cliff, yeah.
Right? So this is a true tax cliff. You need to know this so that you don't, because that's the last thing you want, is to be paying more for Social Security, for Medicare, based on you hitting the cliff. Let me show you. I'm gonna share my screen just so people can see what this cliff is.
Speaking of cliffs, after you hearing Dan do his yodeling, I think everything's downhill on the shows.
It depends how you look at it.
That's a highlight.
It could either only get better or only get worse. Right? You can see this, Tony, this single head of household.
Yep.
103,000, and then your Medicare premium goes from 170 to 244. Wow. And your Part B drug, you get an extra $12.90. You might be watching and saying, well, I'm on Medicare Advantage and I don't pay a thing. I'm not paying any of this. So, no, you still pay, even if you don't pay, even if you have zero premium for Part B or Part D, because it's included in it, you still pay the premium, the surcharge. So this is just extra. And you could see 129 is the next level, then 161,000, then 193,000,
wow,
and then 500. So your Medicare Part B premium can be $600 a person, and the surcharge could be $81 per month. On
$594 per month per person.
Yeah, plus drug coverage. So you're looking at, $675 a month compared to the 170.
If 2 years ago you made $500,000,
or basically pretty close, 193,000 for a married couple. It's 360. 386.
Wow.
So it only applies for a married couple if you make more than 206,000 2 years ago. Right. So, and then there's different brackets. Right.
Sure.
But each of those is a cliff. So you make $1 more, the yodel, it goes over. You're in. Right.
Nice Price is Right reference.
Price is Right yodeler. I don't even know if they have that game anymore. Okay. So here's who it surprises. I want to go through some people that, that's not me. I didn't make 200,000 as a couple. Well, You still get the letter. What if you downsize your home, Tony? What if you bought your house in the 80s up in expensive Massachusetts and you sold it and then moved to Missouri and downsized into a much smaller place? You might have capital gains on the sale of that house.
Right.
Now you get the $500,000 as a married couple exemption, but maybe you sell it for more than $500,000 gains. Or maybe you just have another property or an investment account, something where you're selling and you're getting a capital gain. You're like, all right, I'm going to downsize. I'm going to sell this investment. I'm going to take that and I'm going to park it in something for retirement. I'm going to buy an RV, whatever it might be. You sell that capital gain. That capital gain gets added to your modified adjusted gross income, thereby raising. So you might sell your house and have a $100,000 gain, $200,000 gain. That gets added into your modified adjusted gross income. And all of a sudden, you're at this tax bracket for IRMAA. Like, I only made $60,000. Yeah, but you sold and had $100,000 capital gains. Now you're in the IRMAA. Now you're paying IRMAA. What? Right? That surprises a lot of people. They don't realize capital gains. How about this, Tony? This is a bigger one. And I can't stress this enough. Roth conversions. Oh, I'm going to convert my Roth. I'm going to retire at 63. I'm going to have no income. And I'm going to do Roth. I'm going to get free health insurance. And then I go on Medicare in 2 years. I'm not going to pay a thing. I'm going to pay the minimum, right? 170, whatever it's worth then. But I have all my money. I have 500,000 in my IRA. I'm going to convert that to a Roth. I'm going to convert 200,000 this year because why not? Tax rates are low. Trump tax cuts are expiring. Let's get it done in 2024. And so you convert a big chunk of your IRA to a Roth. What does that do? Well, it saves you future taxes on the Roth, but it might bump you right into the IRMAA tax bracket.
Because that's going to be considered income if you pull it out of a traditional IRA or 401k or retirement account that's tax deferred.
Even though you're paying the taxes on it, it's still considered income for the purposes of calculating whether or not you fall into IRMAA 2 years from now. So 2 years from now, you'll be like, I don't have any money. I don't have any income. Why am I getting an IRMAA letter? Oh, 2 years ago, you did a Roth conversion. Yeah, that was 2 years ago. That's
why you might want to convert to a Roth before you retire.
Or 3 years or more before you go on Medicare.
Yeah, 2 years or more,
right?
Yeah.
So, again, do you not do a conversion because you're afraid of IRMAA? No. But just don't be surprised when you did a conversion 2 years ago and now you're getting an IRMAA letter saying you owe more because of the conversion. Happens a lot to people. So
I assume eventually we're getting to, but I'm interested in, sure, IRMAA, and you're talking about you have to pay more if you make more, and there's a lot of ways that could happen. But you called the show IRMAA Appeal and mentioned something about appealing this.
Yeah, I meant it. Yeah, I meant that it's an appealing aspect of Medicare.
No, it's not.
It's appealing.
But can you appeal this and like try to fight it?
Yes. So I'll go through that. Every year, IRMAA's recalculated. So in the case where you did a Roth conversion at age 63 and you got hit with an IRMAA at 65, you can't undo the Roth conversion. There's nothing you could do about that.
Right.
You can, but you only pay the IRMAA for that year, and then it's recalculated. So if you go, back again and say, look at my taxes, I did that Roth conversion that 1 year, or I sold my property that 1 year, I had a big capital gain, I sold my business, whatever, then the next year it gets recalculated and then the IRMAA can go away automatically. Okay. So if you make this Roth, if you're in that situation, then you lesson learned, it's only a 1 year situation. But I just don't like people getting surprised. So now let's say you're like me and you're like, I don't want to pay for IRMAA. Like, I just retired. Right. I was making good money when I was working, but I'm done with that. I don't make anything now. All I get is Social Security. Why am I paying more for Medicare? You can file an appeal. Okay. So there's a form called SSA-44, and this is the appeal. And here are the things that you can appeal. So the idea is this, Tony. My income is lower now today than it was 2 years ago when you're using it based on those numbers because of one of these life-changing events. And it can't be, I only did the Roth conversion that year. I don't plan on doing it anymore. So that's not me. That's the old me. The new me doesn't do Roth conversions. So I don't want to have to pay. No, you're paying the IRMAA for the 2 years ago conversion. But here's some things that you can appeal and say, hey, look what's happened to me. I'm not going to pay the IRMAA.
Mm-hmm.
You lose a spouse.
Hmm.
All right. Yeah, I had good income. We both were alive. He's gone. I have half the income now. Easy. Fill it out. There you go. Married, you get married, so your income changes. You get divorced, income changes. Work reduction. This is a popular one. I'm not going to retire, but I'm going to tone it down. Yeah, I was making 110,000 full time, doing my job, but now I've gone to halftime, so I'm only making like 60,000 now. Easily provable, showing pay stubs, filling it out, and saying, yeah, again, my income was higher 2 years ago, but I've reduced my hours so much that I shouldn't be paying this IRMAA. I file this all the time. Work stoppage. I retired. I'm making nothing anymore. I'm losing my $100,000 a year salary because I'm 64. I'm retired. That was 2 years ago. I don't work anymore. Easily fill that form out, and they'll wipe out the IRMAA. They'll take it. And if you were paying, because what happens is people retire it and they turn 65, and it takes them a while for the IRMAA calculations to happen. So they're going Medicare, they're paying the normal 170, whatever, and then they get a letter 2 months later from saying, "Oh, you owe more for IRMAA, back due for 2 months." They're like, "Wait, why is this happening now?" It takes a while for these communications to happen from Social Security and Medicare and the IRS. So if you file the appeal, it might take. I had a client fill it out, couple. It took them 9 months to get an appeal rectified. It was during COVID, so there was some issues there. But 9 months, but they paid the IRMAA, and then they got it all back because the appeal was we retired.
Nice,
right? But so that makes sense. That's easy. Work stoppage, easy to prove. Government's like, fine, we get that. Loss of income producing property. This is not exactly how you might think it to be. I had a rental home and I retired. I don't want to be a landlord anymore. So I sold it 2 years ago. And so now I'm not getting rent anymore. So my income's lower. It's got to be involuntary. You can't choose to divest from an income producing property. You can't say dividend producing. Like I had dividend stocks that were paying me good income. I sold those. No, it's got to be through theft, through like a hurricane wipes out your property. So you had to, you lose it.
So natural disaster.
Yeah. Natural disaster. This isn't like voluntarily selling a property so I don't have the income anymore. That doesn't work on appeal.
Interesting.
I did have a client appeal loss of an income producing property. It was a fraud. So they invested in a real estate deal and it collapsed through fraud. So they were able to appeal IRMAA because of that. But yeah, you're not voluntarily getting rid of some income producing asset. I had gold that was, I was taking and I sold it and, no longer have the income from it. No, doesn't work that way. And then the other two, all obvious, also out of your control, your loss or reduction of pension, your company goes under, bankrupt, so you lose your pension, or they settled through some lawsuit, or you early termination and you got a payment on it. You could say, yeah, this is a one-time out of my control thing, and so you can get the IRMAA removed on those. But for the most part, yeah, the decisions you're making now can impact you 2 years from now when they do the IRMAA calculation for your income. A lot of people don't realize that.
Wow, interesting.
Yeah. But for the most part, people that are retiring, their income's going down. It's a piece of cake. Form SS44. I help people fill it out. You fill it out, you mail it in, fax it in, and it's usually no problem. No problem.
Good to know. This isn't something I hear people talk about.
No.
Yeah.
It's you don't think about it, and it's affecting more and more people. Now they finally linked it to inflation, so those IRMAA levels are going up. There was a brief moment. Not a brief. It was like, I think, a 10-year period where it was just flat, 85,000. That was it. And it was like, oh, more and more people getting hit with it. I think it's less than 10% of people have IRMAA, but it could get expensive. So something to factor in. So to conclude, Tony, that cliff should not be a surprise. I've yodeled twice. Don't make me do it again.
Please.
So when you're thinking, when you get that letter, remember the yodeler and say, man, all right, I'm not going to panic. But for new to Medicare people, IRMAA should not be a surprise. So I tell people, don't think Medicare related adjustment amounts are only applicable to people on Medicare. They are, but you can plan ahead 2 years ahead. So understand that it's a surcharge, how it's calculated, and how to appeal. So if you have a letter and you're like, I want to appeal this, I just don't know how. Can someone help me? Give us a call. We'll talk you through it. We haven't experienced this enough. We can just guide you. But again, this is something that I deal with that people just don't. It comes out of left field for a lot of people. A lot of financial people don't talk about it because I don't know why. They don't. I guess. I mean, when I focus on retirees, which is what I do, this happens all the time. So I get it, but for a lot of financial people, CPAs, they don't deal with this. So I'm glad, So if you're watching still, thank you for watching. Subscribe to get our next video. We'll maybe come in with something more exciting to talk about than surcharges on Medicare. But again, taxes are a part of life, Tony.
Good old Aunt Irma. She'll get you.
Thanks for a good show. We'll catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.